And good morning, good afternoon, and good evening, ladies and gentlemen. Welcome to another edition of Bulls versus Bears, the weekly Forex Forecast. And my name is Dr. Greg McLeod. So good to be with you here on this beautiful Saturday of the July 8th, 2023. Doing a big shout out to my dad, whose birthday is tomorrow, July 9th. Big howdy do, and love you too, Dad. So let's go ahead and get right into the week's forecast that my opinions, these are strictly my opinions of what the market will be, what will happen unfolding in the next several days in the Forex market, which also impacts the stocks and commodities and other things as well. So let me go ahead and share my screen with you. Share screen number 2, and we'll share. Okay. Again, welcome to Bulls versus Bears, the weekly Forex forecast brought to you by Elite Traders University. Elite Traders University. Visit us at www.elitetradersuniversity.com. Get your free masterclass to learn more about what we do and how we do it, and also download our free ebook, the income blueprint, the free income blueprint to Forex trading, and also look at other seminars and courses that we offer. We have a special on our boot camp. We're going to save you $2,000 on our 6-week boot camp with coaching by me for 6 weeks. Make sure you check that out at the website. Okay. This is Weekly Forex Forecast, Bulls versus Bears. Let's get to it. Before we get started, I want to direct your attention to risk disclosure on your screen. Make sure you understand all the risks associated with foreign exchange trading. Awesome. I've been doing this for a really long time, almost 28 years. I'm the founder and CEO of Elite Traders University, and I've been spent 8 years as a currency analyst and trader coach at one of the world's largest forex broker dealers in the world. Graduated from UCLA, one of the top 20 public universities in the country, and I also have a doctorate degree in Christian leadership and business. And I've worked for a number of banks and other financial institutions, and my articles are still being used online to train and instruct people around the world who desire to trade. I'm also the creator of the Pip and Run Forex scalping system and the Power Trader system as well. 2 systems which help students and people achieve over 90% win rate. Okay. Anyway, let's move right along. We're going to talk about the dollar index, euro dollar, pound dollar, Aussie dollar, dollar yen, dollar CAD, gold, silver, oil, S&P 500. But both we're going to start with the economic news. We're going to start with the economic news. Found one of my top secret trading tools that I encourage all of you to check out is my market heat map. It's arrangement of currency pairs by percentage change. It tells us what's hopping, what's popping, what's dropping, and what's not in the Forex market. And you can go to www.mymarketheatmap.com, and it's 50% off on the front page. Very affordable for the amount of tools that you get. 6 powerful heat maps. You can just come to the front page, and for free, you can have access to the majors, the 7 Forex majors, and the US dollar index. And during active market hours, these tiles will change colors and will move up and down and give us great entry signals in the market. Okay, absolutely free. You also, if you refresh the platform, the economic calendar will appear, and you can actually use the economic calendar for free. Okay, and also watch our video on how to use the heat map. Okay, so let's go ahead and get into the economic calendar, which I already have preloaded, and we'll start looking at July 10th, or this week. And I call this Fun with Flags. I know you've heard the if you've watched the Big Bang show, I love Big Bang with Sheldon and Amy, and they have a little sub show called Fun with Flags. I call this Fund with Flags, because you can find out what to trade by looking at the economic calendar. Now, many of you don't like economics, you don't like calendars and stuff like that. I want to tell you that hedge funds, I work for a professional, I work for one of the top largest Forex broker dealers in the world, and every Monday morning, we sat with other brokers and other traders, and we went over the economic calendar, because that is what drives the currencies. People say, I wish I had insider information. I wish I could find out what the big guys are actually trading. Well, you can just go to an economic calendar. Forex Factory has one, Bloomberg has one. There are a lot of them online. I love this one because I filter by the high impact items, read very impactful. The more impactful the market, the news item is, think of news as like a giant rock. When that rock hits the water, it creates a ripple. And that ripple, that shock wave, causes the boats to move. And you think of all the currencies as little boats with little flags, right? And what happens is that the wind in their sails is volatility. That volatility is created by the news. So pound news will move the pound boat. Aussie news will move the Aussie boat, right? And the dollar news will move a number of boats in the major categories, right? So we know what they're going to trade just by looking at this. So right now, July 9th, my dad's birthday, there is the Chinese inflation rate. So Greg, we don't trade the Chinese renminbi. It's kind of hard to trade. It's a controlled currency. It's being controlled by a lot of different parties there. Let me make sure my microphone is working. And so Chinese inflation rate, well, one of the largest trading partners with China is Australia and New Zealand, or China is the largest trading partner of those two countries. And so those countries, those currencies will move on Chinese data. And when think of China, if they catch a cold, the Aussie dollar and the New Zealand dollar and the New Zealand economy will catch the flu, okay? Because they're such a big partner. And so inflation rate year on year is supposed to be flat at 0.02%, but you'll look for ripples at 9:30 p.m. on Sunday. At 3 o'clock p.m., we're going to go right to GDP. GDP is the UK, the Great British Pound. You see the pound, the UK flag, the Union Jack, and that's going to be a speech. And you're going to see some volatility or some movement in the pound on that day. At 8:30 p.m. the same day, we're at Westpac Consumer Confidence Change. Now, it's not really important to know what these numbers are or what these things are. Just know that when they come out, people who are a lot smarter than we are going to be watching these numbers and trading those numbers and positioning themselves in the Australian dollar currency because of the news event, okay? Now, the confidence is supposed to rise from 0.2 to 2.7%. Now, on the surface, yes, this could be very positive for the Australian dollar. All we care about is that's what they're going to be trading. We can use our systems, we can use our indicators, we can use whatever we use to enter the market. We can use it to our advantage to trade this pair, because trade selection is one of the most important parts of currency trade. If you're trading the Turkish lira while this news is going on, you're not going to get any movement. And so consequently, you're not going to make any money. And then you're going to say, well, gee willikers, the Australian dollar is moving. Wonder why? Because there's news. And you're not in it because you're trading something that you like trading, or it's your favorite pair. It's the only pair you're focusing on. Well, the market doesn't care what your favorite pair is, doesn't care what the only pair that you're trading. This is where the action is. This is where the party is, okay? If you trade anything else, you're going to get flat beer and broken stale chips. This is where the party is. This is where the dancing and the party and the music is going on in the Australian dollar during this time. Now, I don't recommend that you trade during the news announcement, but in fact, wait an hour afterwards to actually get the actual direction. But you're going to look at, as we look at other news items, or like for instance, the Bank of Canada monetary policy, people have already positioned, big institutions and hedge funds have already started to position themselves in the Canadian dollar. So look at CAD yen, look at CAD Swiss, look at dollar CAD. As the days go by, as we get closer and closer, these guys who are anticipating a move are going to start pushing that currency in their direction that they want it to move. This stuff is all fixed. It's all rigged, okay? Forget about fair play and all that stuff. The information is already disseminated about all of these things. Clarence Speaks is alive and well. If you ever watch Trading Places, you'll see who Clarence Speaks is. Clarence Speaks has the attache, and these guys, right now, it's electronic now. You pay to play. You can pay Thomson Reuters and get this information ahead of time, even before the market. It's not fair, it sucks, it's fixed, it's rigged, but that's the way it goes. That's why you're watching me, because I was an insider and I'm kind of like, I have a heart. I actually want to help people. Okay. Why? Because I was a middle school teacher before, so I can't help myself to help people and be nice to people. Plus, I'm a Christian too. So we're going to look at Australian dollars going to be in position. In fact, before this news is released on Monday, people were taking positions into it after non-farm payroll. Okay. So we have also the UK at July 11th at 2 a.m. Eastern time. All these times are Eastern time. I use Eastern time because New York is the financial center of the world. And so I do everything in Eastern time. No one cares about Pacific time or Central time unless you're a commodities trader and you live in Chicago. How about those cubbies, right? Then you're going to be about the commodity market and the Central time zone, right? Claimant count change. This is their unemployment rate, and they're looking at going from negative 13.6 worse to negative 22,000 jobs or people on unemployment. And so that could be impactful to the UK. Don't think it's that people think, oh, it's going to be negative for the currency because people are employed. No, that's not how it works. More people who are unemployed, the higher the currency goes, because it means that that inflation will be lower, right? Unemployment rate expected to stay on point or unchanged at 3.8%. So again, lots of UK flags. So that's going to be put the pound yen, pound Swiss, pound dollar, pound CAD, all on the map for you to be trading. Put that in your watch list. So if you're like, oh, I want to trade, there is some Swiss, like Swiss franc. I love the Swiss franc. I'm sorry, there's no Swiss flags here, so don't trade it unless you're going to trade against the pound. Okay. You have Euro CPI. CPI stands for Consumer Price Index, but I remember I told you, if you watched my previous broadcast, when you see I, think of inflation, consumer price inflation, okay? And when that number is high, it usually means that they're going to have to raise interest rates to fight inflation. And when they raise interest rates, it actually raises prices. It actually makes things higher, but it also is a job of pressure when inflation is there. And if interest rates are going higher, well, that makes the currency rise in value too. Because think of a bank. Would you rather put money in a 4% bank or a 6% bank? Oh, I don't know. Well, 6% bank, okay. Because why? Because it has a higher interest rate. So as the ECB or the European Central Bank has to raise interest rates to fight inflation, it will attract capital to invest in the euro. So we're looking at CPI actually rising from 116.5 to 116.8. We actually saw a breakout on the euro dollar, and I said in my last broadcast, my last bulls versus bears, I said, look for a reversal in the euro. And I'll show you that chart. I said, other than inflation, things like that, cycle, there was an astronomical cycle with the full moon. It didn't happen right at the full moon, but that week we got the big giant breakout in the euro that happened on Friday after non-farm payroll. So that's why you watch bulls versus bears, so you can get the heads up on that. At 5 a.m. we have we have ZEW economic sentiment. This is the flag of Germany, but they are the largest, one of the most, they have the most amount of GDP representation in the Eurozone. So they are very important. It's Germany, then France and Italy, the big players in the Eurozone. Now, economic sentiment is supposed to get worse from negative 8.5 to negative 10, right? And so we can see some volatility. All we're looking for is volatility. That this is what people are looking at. You want to have the euro on your trading list of pairs to trade. The euro versus US dollar. The euro is called the anti-dollar, and it's probably the most traded currency next to the US dollar. So like 85% of all trading volume happens in the euro dollar. And so we have also the big one coming up at 10 p.m. on July 11th, 10 p.m. Eastern time, Eastern Daylight Time, is the Reserve Bank of New Zealand interest rate decision, RBNZ. Reserve Bank of New Zealand. Some people call it the Royal Bank of New Zealand. It's really the Reserve Bank of New Zealand interest rate decision. They're widely expected to keep rates unchanged at 5.5%. And even if they keep rates unchanged, they're usually bullish for the currency. However, they may surprise with a hike, given a high property value. Their property values are through the roof. Inflation's still high, so they might surprise with a hike. If they surprise with a hike, look for the New Zealand dollar to really blow up to the upside. Right? Interest rates are one of the biggest drivers of currencies. So when you see interest rate decision, that's a red alert, all hands on deck. It's interest rate decisions, non-farm payroll, and those are the biggies, and inflation reports now. In the past, inflation has been so low, 2% inflation for the past 10, 15 years, that inflation really didn't mean that much. But now that we are in this high inflation environment, interest rate or inflation rate decisions are very, very much in play. Australia, we have the Reserve Bank of Australia Government Low Speech at 11:10 p.m. There's no data involved in that, but if the governor starts talking about raising interest rates even more, or how bad inflation is, he says anything like inflation is mitigating or things like that, there's, like I said, very smart people watching a Bloomberg terminal, listening to every word this guy is saying, and you're going to see lots of volatility, lots of trading opportunities in the Australian dollar while he's speaking. Now, Wednesday, July 12, 8:30 a.m., we're going to have U.S. core inflation rate month on month. That does not mean MOM. M-O-M is month on month. And inflation, in fact, that's the big driver of everything, of all prices in stocks and commodities and currencies, is inflation. And the cost of goods were above the Fed's target of 2%. We were trailing, going in around 6 to 7% inflation, which is 3 times higher than normal. And we're going back to the way prices were going on back in the 1970s and 80s. And that was very, very alarming time for people when inflation was going up and they weren't making any money hardly. So they don't want a repeat of history. So that's why they're very, very concerned about this inflation thing. However, we see that core inflation is without food and energy. Okay, I use lots of food and energy, but what else other than food and energy? What is there? Well, there's entertainment and there's other things, durable goods. So 0.4%, we're looking at a fall to 0.3%, which will be very good news if inflation rate has dropped. If it has in fact dropped, then that would be very bearish for the US dollar and could send everything much higher. The stock market higher, the oil higher, the pound, the euro, the Aussie, New Zealand dollar, Canadian dollar would all soar if we get a 0.3 or a lower. However, if we see a higher number, we could see a crash in those things I just mentioned. Okay, that's the big kingpin controller of the economic calendar is inflation. Year-on-year inflation, they call it a drop from 5.3% to 5%, still above the Fed's target of 2%, but it's moving in the right direction. And that would give the Fed pause to have more rate hikes, but not as large, right? Year on year, a full percentage point, or not 0.9% lower, from 4% to 3.1% U.S. inflation rate year on year. And so that gets closer to the 2% target. We're getting closer. And so as we get closer, again, we could see a dollar drop precipitously if this comes in. If this came in at 2%, the dollar would be completely dead, and we would see explosive moves in Bitcoin, in all risk assets, in the Aussie dollar, Aussie yen, would just explode. US CPI, I don't know. This number looks really weird. 305.21. I've never seen CPI expressed as that. So maybe it's 0.3, maybe something like that. The CPI, that's an odd number there. Inflation rate month on month, 0. They're calling it month on month, an increase from 0.1 to 0.3. So that's kind of interesting, while other inflation is dropping, but the month on month is higher. And it could be because it's June and maybe summer, and maybe there's fuel price rise going into the summer holiday. 10 a.m. we're going to see the Bank of Canada with another rate decision policy report. They're expected to hike rates 25 basis points from 4.75% to 5%, and that could cause the Canadian dollar to rise as well. We can see maybe dollar CAD drop. We can see CAD yen rising, CAD Swiss. Those are the currencies we want to look at. Balance of trade also on Wednesday out of China from 65.81 to 68 billion, so an increase of over 3 billion, which would be very positive for Australia and New Zealand. So even though we don't see the New Zealand currency flag here, or New Zealand flag, we do RBNZ, and you're going to have an extra kicker with the balance of trade. Thursday, we're going to have lots of UK data, month-on-month GDP, expected to drop from 0.2% to negative 0.4%, showing that the higher interest rates are starting to slow the economy down. Slowing down the economy would mean lower inflation, 0.5% versus negative 0.2%. Year on year, YOY, not YOY, but year on year. So this year compared to last year. Now, and then 8:30, we're going to see US PPI, that's the producer price index. Again, when you see an I, think of inflation. So we're looking at wholesale inflation. They're looking at a rise from negative 0.3 to 0.2%. And that would be bullish for the US dollar on Thursday. If that is true, forecasters get it wrong too. They're very expensive bean counters at the federal agencies, but they get it wrong too. Core PPI month on month, 0.2%, calling for 0.2 unchanged. Core, when they say core, it means minus all the stuff that people buy, minus food, minus energy, and sometimes minus transportation, because car and vehicle prices can rise and fall. So core PPI year on year, they call it a drop from 2.8% to 2.7%. And then later on at 8:30, we're gonna have, this is gonna be like full on 8:30 a.m. news cycle on Thursday, be very active. We're gonna have US initial jobs claims, weekly jobs claims. It's a volatile number. It changes from 248,000, 249,000. That would also be bearish for the US dollar. And the US Michigan consumer sentiment on Friday, our last big item, 64.4, rise to 65.5. So we can have consumer confidence, a big driver, since 80 or 90% of our economies, our GDP is consumer driven. And so any positive move here would be very positive probably for the risk on currencies. But again, too high a consumer sentiment could mean that the buying and inflation could start back again. So this could be bullish for the US dollar if it's considered inflationary. Okay, with that, we just got through a lot of economic stuff this week. So if there's any time of the year of the month that you need to watch this is the one, right? So let's go ahead and go into the technicals. And the technicals is like how we connect these numbers and put some meat on the bone. So what's a possible trading idea, right? So I'm going to remove all drawings, remove all indicators, and remove all indicators. And so we're just going to, in fact, I'm going to get rid of this, go back to a single chart, like a pirate trading chart, this one ARG. And we're looking at Bitcoin, nice big move up to the upside, right? And we're stuck in a range between, I know I'm not starting with Bitcoin. I'm going to end with Bitcoin though. I'm going to actually go over to, I was always started with the Dixie, which is the US dollar index. Dollar index is a basket of currencies versus the US dollar. I like starting off with a monthly chart and working our way down, and we can see that we had a very strong uptrend, but we've been moving sideways for a very long time. And the more sideways, we're anticipating a bounce. We have this uptrend, and we're anticipating a bounce to the upside. However, a couple of things have been going on, right? We've been in this range for a very long time, and usually the longer the range, the wider the base, the longer the race. So we got this base though, but it tried to break out, try to break out. We're making lower lows on this monthly chart, right? We have a low, a lower low. And so we basically have what we call it, almost like we call it a descending triangle, right? The descending triangle where we have these lower lows, but the bulls are defending this 101.13 area, but they can't get stuff out of this triangle. So we're looking for this to break south, and with a lot of fervor, as especially if the inflation demon is slayed, or the inflation dragon is slayed, we can see prices come all the way back down. So they've basically been in a range for a number of years. We broke out because of some supply disruptions and COVID coming out, and now we're looking for prices to come back into this range, right? Coming back in here, right? And with that, we'll see rallies in stocks, rallies in commodities, rallies in crypto, right? So bulls versus bears, I am bearish the US dollar, okay? And I think we go much farther, we will go lower. And the non-farm payroll that came out, we did have that last week. Let me go back to the economic calendar just really briefly. Non-farm payrolls came in at 209, and that is what we wanted to see. The Fed wants to see the job market to take a tumble, and every time we've seen, look, revised higher, previous number was higher. The forecast was 225. We came in below forecast, and that is going to be a very good for the Fed. Not good for the person who lost their job, who's sitting on the couch saying, "What should I do? Maybe I should trade with Greg and learn how to trade, because the Fed's using my job as a way of lowering inflation." Because people who are unemployed can't buy stuff. If they can't buy stuff, prices fall. And that is it. This reminds me of that Star Trek when they were having that computerized war. And they go, "Oh, your city just got destroyed, so all you guys report to the disintegration chamber. Oh, Captain Kirk, your ship just got hit." I go, "No, it's still there." "No, it's not. According to our scanners, your ship is destroyed. So have all your people beam down and report to the disintegration chamber." It's like, what? So it's like a science fiction thing, kind of like a dystopian kind of thing, where job destruction lowers demand and lowers inflation. Because when the cost of capital goes up, companies that rely on loans or borrowing from the banks to support their business, they can't borrow anymore. And if they can't borrow, they can't expand. If they can't expand sales, and they have to lay people off. And when they lay people off, those people can't buy. If they can't buy, prices fall. So that's that is and that's why I encourage you to learn how to trade, learn how to opt out of the system. So if they lay people off or they hike interest rates, you're just immune to it, because you are generating your own paycheck. In fact, by just trading, by day trading the market. And go to elitetradersuniversity.com to find out more. Go to www.elitetradersuniversity.com. My shameless plug, we're going to put in here because you really need to get opt out of the system. Unplug yourself from the matrix. Take your trading to new heights, all the right tools and training to start trading professionally in 90 days. Help you to pass those prop trading challenges so you can have access to 25, 50, or $100,000 of capital or more. Okay, teaching people how to do that, getting free and getting unplugged every day. And you need to join elitetradersuniversity.com. Okay, back to our show. Okay, so bulls versus bears, bearish, which means let's look at the euro. The euro is called the anti-dollar. It was created in 1999, released in 1999. It's actually been around for years before it was released. And here is our euro. And we remove all drawings, right? Starting with a monthly chart. And we can see that we've spiked. We were in a range, just like the US dollar. We were in a range, high about 125.26, the low somewhere in here at the 103.53, and we're bouncing around, and then finally broke, right? And now this is a fake breakout. This is called a bear trap. A bear trap. The bears went down, they got trapped, and then price went up, and now they're getting stopped out, right? So all the people that thought, oh wow, the dollar's gonna get super strong. Well, this is just in an overall range. This was just the breakout. I mean, it took a long time. I've been rallying ever since then, of higher highs and higher lows, right? We were still, people say, well, Greg, you're still in a downtrend. It's like, yeah, but the momentum has basically changed. And the fundamentals that are driving this market have changed too. We went from a high inflation environment that broke prices out to now inflation is starting to mitigate, starting to turn down. And as inflation goes down, well, guess what? We'll start moving higher, right? At least maybe to the 115 area or so. So bulls versus bears. Let's drop it down. We can drill down to a weekly chart. And our weekly chart is showing something too. And, we can maybe, let's see, something here. And yeah, so we've got basically a flag formation. We do have higher swing lows. And we have higher swing low, basically a double top here. And so we still have a bit of resistance to knock out at the 109 area. We break that, then we have got a smooth ride back to this trend line here. Right? Back to some areas that we haven't seen since July of last year. So that's on our weekly. Let's drill down to a daily chart. We can see that we've got a nice, maybe like inverted head and shoulders down here. And now we're maybe going back up to this, 1099 area. So that's about 130 pips away. So we got about 130 pips of upside, right? And if you put our old the indicator, the moon phase indicator, and I don't know why we don't have our default view. And I'm going to make it the blood moon, right? And we get rid of this altogether, make this plains. So we've seen that when we have a trend change in the full moon, we see that we've got an upward move. So here as long as we're in an uptrend, the moment we broke uptrend and headed downtrend, then the full moons were not helpful. But at the turning points, we're seeing a rally. So first target, maybe the 1.100 whole number round number. And we'll probably have manic Monday and then turn around Tuesday. We get a little bit of a pullback. We drill on down to like a Let's drill down to a 4-hour chart. You can see we're gonna probably get a little bit of a pullback, some profit taking, right? Take this off. We get some pullback, and in fact, if you want exact targets, well, I'm feeling a generous mood today. We might see a pullback. Ideally, the 109.19 area would be a place where we would like to look for. I mean, that's where I'm looking at anyway. I'm not giving any trade recommendation or advice, but this is what I'm looking at. This is I'm looking for a pullback to the 109.19 area, and I'm looking to get in it to win it, to take it north. Okay. Bulls versus bears. I am short-term bearish, but I am medium to longer term bullish on the euro. Okay. I'm gonna move right along to our next pair, going right across the channel, the English channel. They call it the English channel. I don't know what the French call it. Do the French call it the French channel? Anyway. And a monthly chart, we can see that, we're basically, just stacking north on the on this British pound versus US dollar. Higher highs and higher lows. And with little pauses, little red candle pauses. We basically pause for about a month, and then boom, we keep going up for like two months or more. And then we go drop down to weekly chart, and we can see higher highs, higher lows. We have a nice V bottom low that we had. Our V bottom low at the 103 area, right around when the Queen died, and then when Charles was coronated. I said we're going to look for that rally. I was talking about that at a conference in Miami, and I said, what's your biggest trade? I go, it's probably the British pound, a rally after the death of the Queen and the coronation of King Charles. We're probably going to see this extended rally in the pound back to the old highs we had back at the 140 area, right? So we're still in this uptrend. Bulls versus bears. I am bullish. Short-term bearish, very short-term, like a day, maybe Monday pullback, Tuesday, Wednesday, upward move in the currency. We drop down to a 4-hour chart, and we can see it too is taking a pause, and they're gonna a bunch of double top guys are gonna get in there and go, oh, double top, and they'll sell it, and then we'll get a nice, if you want a nice entry that I'll tell you the entry that I'm going to look at. And you're welcome to do whatever you want to do, but again, this is not trading advice, mostly entertainment education. Hope you're enjoying the program. Please, give me a comment down below. Let me know what you want me to cover, and I'm looking for a pullback to like the 27.48 area. That'll be my entry there. We use Fibonacci time to see how long it would take to get there, but pretty much know it's probably Tuesday. We'll probably get there for a rally to the north side, right? And if you wonder why I'm so confident about this and why I have a high degree of accuracy, well, then check out the masterclass at elitetradersuniversity.com. Absolutely free, okay? And also join me for my weekly on Thursdays at 8 p.m. Eastern time, Eastern Daylight Time. I do a special webinar. Do we have a name for that webinar, actually? Thursday, give me a name for it. Why don't you guys think of a name for it? But I cover, in fact, this week I'm going to talk about how to pass a prop trading challenge, okay? I've got a number of students who have passed them, who have $50,000, $100,000, $25,000 accounts that they're managing, and I'm teaching them and learning from them as well, because each company has its own variation and nuance. I'm going to show you how to do it. And if you're interested, make sure that you check your email, make sure you get on my mailing list. The way you do that, go ahead and register for a free masterclass. And if you register for the masterclass, you should be able to get access and get news of our next webinar. Okay. All righty then. So let's go to our next currency pair. Well, you look at Aussie dollar. We're going to go across the planet, the other side of the world, land down under, and go to AUD, USD, MOUSE, and then take a look at what's going on with the monthly chart. And you're going to see a common theme as we're basically trading against the dollar, right? It's all AUD, USD, GBP, USD, right? And so when you have the dollar on the back end side, you can see that these currencies, after making lows, are making higher lows, right? They've also made lower highs, which creates this indecision triangle, right? So we call it demand. We have a demand trend line. Like I used to have colors and stuff, right? How about editing? There we go. Demand is usually green, and supply is usually red, right? So you have supply on the top side, demand, and when demand is greater than supply, we get a breakout. That's what a breakout is, okay? And so I'm looking for bulls versus bears. I'm looking for this to continue higher as well. And we can go drop down to a weekly chart. And we may move sideways for another bit, but look for a move back up to these old highs that we saw in the back 68.91. And we got a little inverted head and shoulders. We have our shoulder, head, shoulder. So Greg, I can't see that. It's like, yeah, it's kind of murky there, right? So if you take all that to some type of shoulder, and then this was some type of shoulder here, head, and then shoulder. You have an inverted head and shoulders. Right? And so we look for a breakout that'll take us up. And we can do a measurement objective. We can actually project our possible target, taking the tip of the head to the neckline. And I mean, we can make that the neckline. Well, and then we clone this like a sheep. Clone. Bring in the clones. Then we look for possible target. No, I mean, it's not going to happen. Not going to happen right away. It took weeks. With weeks and weeks. However long it took for this to come down, it will probably take that much time to get up there, right? It took from November to July. That's like December, January, February, March, April, May, June, July. It took 8 months to get down here. It may take another 8 months to get back up here. But anyway, the market tide is changing. And you say, well, the people thought it was changing here, was changing here, was changing here. But again, we have the fundamentals underlying it. We know that inflation is moderating, and which means the U.S. dollar, our driver, is looking at getting weaker. With these currencies getting stronger, we walk this down to a daily chart. You can see, look, nice bullish engulfing candle on the daily. Walk it down to a 4-hour, and you can see we're going to get a little bit of a pullback. And we walk that down to we can walk it down even to like an hour. Really get you a nice entry there, right? And just take a fib from the low to the high, and we get down to 30% retracement is 66.10, right? This is what I'm looking at. You can do what you want to do, but I'm looking for a pullback and then an extension north, right, from that point. Bulls versus bears, Aussie dollar. I am bullish. The Australian dollar has, China seems to have been awakened after a slow start after the COVID opening. And so as the Chinese economy continues to hunger for raw materials and commodities and raw materials out of Australia and New Zealand, we're going to see those currencies actually rise. We have the Reserve Bank of New Zealand. They're having an interest rate decision. So let's see how we would trade that. when you're looking at charts, it's like looking at footprints in the sand. And we're going to remove all drawings and start from scratch from a monthly chart. Yeah, the reserve interest rate decisions, one of the largest, most powerful announcements. And what we really got here, which is very powerful, is a double bottom of monthly chart, right? In the 5509 area, and we have a higher low structurally. We have a higher low, and all we need is a higher high to really kick this in. But it's safe to assume, even though it's not, you don't want to assume to make an ass out of you and me, but we can see that this is basically pulling back like a slingshot. Pull back, and we look for an extension. So bulls versus bears. I am strongly bullish the Kiwi dollar. I look for at least first target the 65.70 area, and then we can look at Fibonacci expansions. I mean, we're already pulling back on a monthly chart. We have hit the 61% retracement zone or 50% retracement zone. No, 50. We had a 50. It bounced off a 50 zone on the Fibonacci. I'll zoom in on that as large as I can so you can see it on your screen. And that way you can see that this area of support was hit multiple times. Boom, boom. And now we have a takeoff. And so we can look for a move from the 6207. I mean, this is a monthly chart. So, it's not, I mean, each candle is 1 month. So, and we're just getting started here. Remember, this covered a lot of territory. We're only in the first week of July. So that's telling you how powerful this is, right? And so our first target, just a moderate first target would be 62.90, right? 62.90. We're at 62.16, so about 74 pips. But a longer term hold, we're kind of looking at, if you're a position or swing trader, which I am not, we can look at a price at 65 cents. You want to get really, and I have a video on Fibonacci expansions to put the expansion target on there. Now it gets really interesting when you can actually see, first target 69.75, next target 72.44, 1.618 target 75.86. All the while you're holding something like this, you're going to get like a 5 point, whatever the interest rate is, with 5.1%, 5.5%. In 5.5, you get at least a 5.5% interest rate while you're holding, which is a pretty nice deal. All right. So you'll get positive swap, especially if you trade versus like if you want positive swap and longer term hold, NZD JPY would be your currency of choice. Right, you'll probably see a bit of a pullback from here. Take a fib from the high to the low, and look for a pullback to about the 78.17 area for a possible move up. But what's the monthly chart? Probably not get that far. I'm not gonna. Yeah, that would take a long time to happen. But looking at the daily chart, looking here. Yeah, we're getting a little bit of a pullback, right? So we get a pullback down to 87.30. There's also old support right there, 87.30, bulls versus bears. I'm short-term bullish. Short-term bearish, but medium to long-term bullish, right? Remember, price can exist and it can go in two different directions in the same on the same candle, right? So so we're not contradicting each other. I'm not giving contradicting information. I know if you're here for the first, what does he mean? He's long and he's short at the same time. It's like, yeah, things will go down for a bit, and then it goes up, right? Okay. So we've got we have inflation report. We looked at the euro. again, we looking back at the economic calendar, make sure we covered everything. We checked the pound dollar. Yes, we did. We checked the euro. We checked New Zealand dollar. We checked the Australian dollar. I believe. Did we do that? Yeah, we did. Okay. I believe we did. We can check it again. Check it. We can check it again. No worries. AUD USD. If I did not, then it's covering now, right? Oh, I think we did. Yeah, we did. You gave your pullback and the inverted head and shoulders. Yeah, cool. Let's go to the Canadian dollar. Let's go to we go to USD CAD, and since USD is in the front, bullish CAD means that we have a drop. And let's see, go to our monthly chart, clear all the drawings, and we can see that we had this massive double top on the Canadian dollar here. The two big wicks, this rejection, sell orders, just bam, hit a bunch of sell orders. Then lower high, a lower low, a lower high. So we're in a downtrend on the monthly chart. Especially the price of oil is going up, and Canada is one of the largest suppliers of oil to the United States. Bet you guys didn't know that. You probably thought someone placed in the Middle East, right? So we're in a downtrend channel. We're at the top of the channel, and now we're making our way back down to the downward channel. So we're in a downtrend on dollar CAD. So any rallies in the shorter term should be met with sells based on classical technical analysis. So let's go down to weekly, and we can see double top there, and we're trending down, lower swing highs, lower swing lows. We are in a downtrend. The downtrend is starting to pick up, as we can see that from this trend, we're creating another downtrend, right? We gain a little bit of a rally here, right? A little bit of a rally, and that looks like it's sellable, right? Dropping down to a daily chart, right? And you can see we rallied up. We rallied to a Fibonacci resistance area. We rallied to a 38% retracement, one of my favorite selling retracements. Got our railroad tracks side by each, and now we're heading on, moving on down like George and Wheezy played backwards. Moving on down. All right. So we have a bear flag, looking for a break. So bulls versus bears, we are bearish this pair, right? We are bearish, right? Now we might have turnaround Monday, Mag Monday, which we'll probably see our rally in the US dollar, which is tradable for a scalp. Maybe you can get 10, 20, 30 pips to the upside. However, turnaround Tuesday, look for boom, break, south side break, and a perilous trip down memory lane, right? Back down to the whole round number, top bottom of the channel is at one spot 300, right? Now, the thing about it is, you'll see this, it's a downtrend, yeah, Greg, and you sell right here, you will lose money, guaranteed. When you sell at support, you're gonna get creamed, right? You want to sell high. You like Snoop Dogg, sell high and buy low. Not that I'm advocating any type of use of foreign substance, but I'm just creating a visual a visual in your mind that when you're trading to sell, you want to trade like Snoop Dogg would if he did trade, and you want to sell high and buy back low. Okay. Now, you're going to have a difficult time washing that out of your brain. That's the whole point, to put in helpful pictures to help you trade better. So dollar CAD. So let's say you want to say, well, Greg, dollar CAD, CAD bullish, but it's going down. My brain can't wrap around that. And I understand that. So you do this. Go CAD yen. Go CADJPY, flip it. Right? And let's go back, walk it back up to the monthly chart, remove all drawings, and then, so this is how you do the flip side, right? This is very interesting. If you see something like, oh, Greg, I see a double top here. Yeah, it's a yen pair, and yen sells are we rarely get. Yeah, I mean, yeah, you look back here, it's a monthly. You see, well, Greg, I see lots of sells back here. You're like, yeah, but the yen. Remember, in Japan, interest rates are negative. That means if you put money in a Japanese bank, they will charge you to hold on to your money. But they do that in the United States, you know. They get you a $12 fee and I get like $1 in interest, so it's negative interest rates. Yeah, but think about if you had to pay hundreds of dollars to hold your money, right? Based on how much you have in there. That's negative interest. So money leaves Japan, leaves the yen, and is trying to get converted to something else that's going to earn money, not lose money. So they've designed a system where money leaves Japan and has to get invested in other things, like the US stock market, like oil, like gold, like Australian dollars, New Zealand, anything that's going to give you more than a negative yield, right? And so, but right now, you're saying, well, gee, looks like that's not working. Right now, looks like the yen is getting stronger. We have this pullback here on the monthly, right? And a double top. Okay, let's look deeper in the internals, walking down the weekly chart. And you're like saying, see, Greg, look, double top right there. It's like, yeah, this is real. And yeah, that double bottom invalidates this double top right here. And so basically, we're looking for a pullback because it's pulling back, right? It's going to probably pull back to a 38% retracement. This is just my opinion. My 2 pips worth. Don't put your life savings in any of this. Greg told me to do it. And please don't listen to anyone that says, hey, I got trained by Greg McLeod. I'll trade your money for you. Don't listen to them. That's a scam. But I don't authorize anyone to trade money for anybody. So be aware of fakers or people impersonating me. You know, I'm seeing, my handle being used on different things. So here we go. Anyway, beware. Yeah, we see a drop down to like 104. That's a weekly. It's probably gonna be. That's gonna be a long time. Let's go to a daily. Great. Well, okay. How about a 4-hour? Here we go. 4-hour charts are called dealer charts, and we can actually take because this would take a long time to get down here. It's like 200 pips. Like it could. So you can take any one of these swings. And the last swing we had, that's the major swing, was we had this one, and we had this one, and we had this one. So probably this last one. So we're there actually, right? So we're already, I think we're already here. And so we might see a bounce from where we are, or a little bit lower, right? 4-hour, can we go higher? 8-hour. Very interesting. Yeah, this is, yeah, you're right here. You see right there at this wick there, we might see a bounce there at that wick is at 105.93. Okay. Anyway, so currency wise, I think we've covered those that will be most gold on the other hand, let's take the gold should be reversing. I know it's been on a decline, but and it did really sell off, huge sell off. Congratulations to my student Rotemi. Rotemi hit that gold and he made like $10,000. It was like awesome trade. Yeah, and so here we get this nice. Let's just go out to a monthly and remove all drawings. And you can see that we had this triple top. But really, we don't have triple tops in the market. They're all kind of. We say, well, Greg, it did reverse. Yeah, triple top would be a total reversal of trend. What we did was, yeah, double top an ABC correction, a 1, 2, 3 on the upside, and now we're pulling back. And we're pulling back to a level of support. And this should blow up to the upside. Especially, see, we tagged the 30% retracement. We're bouncing. We should have one more shot down for Monday. Maybe. No, let me go to the weekly. We're weekly. Okay. See, we've got the, yeah, and then you go down to a daily. Bulls versus bears. I'm actually bullish gold. Yeah. Short-term bearish. But I'm looking at, we got a supply line right there. I'm looking for a break. We can break say 1936 or so. We can really start clocking up, right, to the upside. Nice pullback to the 38% retracement. Nice tag. Tag, you're it. They got tag bases where he steals next base. Yeah. So gold, I'm positive with gold. Oil already moving. WTI is on the way higher. West Texas Intermediate has bottomed at that 67.50 area, and now we're seeing a move higher on oil. Oil looks like it wants to hit back toward the $85 range. We're at the bottom of the range. This is very low risk entry. Not telling you what to do, but if you look at, if we enter anywhere in there, stop. We've got a nice risk reward for oil. Okay. And let's go to the S&P 500 with time remaining. SPX 500. I'm going to use a CFD. But finding it, trying to figure out the contract specifications. All right. And you can see how I had charted out inverted head and shoulders. And we have up, pull back, and then rally up to the north side. We'll remove all drawings, start from scratch. And we can see going to a monthly chart how we basically, we bounced off of Fibonacci support as predicted, trend line break, and we're looking for a move higher toward the old high, 48.36, looking for a slingshot move there. Seeing a pullback here, probably have a big downdraft on Monday, and then we'll probably see a rally on Tuesday. So I'm short-term bearish, very short-term bearish, but I am medium-term, long-term bullish, and this is going to be a very good move for the S&P 500 for those of you who trade indices. Looks pretty good, especially we have a big gap here that hasn't been filled back here, and then at least get to the 4,700 area. And if you look at all my bulls versus bears, I've been bullish S&P, bullish NASDAQ, while people are saying, "Whoa, there's a recession coming, we're gonna be crushed." Like, wrong. I've been doing this for 30 years, guys, and it's like this was like a no-brainer, except for the people that are like saying, "Whoa, majority of people are short." Well, losers pay winners, and you have to have a bunch of losers on one side of the trade in order to pay for the guys to be winners, right? You have to have losers to pay for winners. I know it doesn't sound right, but you get a bunch of people in chat room, they're all losing, but they're paying somebody. They're paying the broker, they're paying the market maker. And so it's to their advantage to put out information about you should be short, you should be bearish. Believe me, 2008, everyone's talking about global financial crisis, everything's gonna go to pot, blah, 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 blah. And I got short and I got screwed. So I realized when everyone starts yelling short, you go long. When everyone says, "Hey, this is going to go to the moon," you sell, right? Like Bitcoin at 70,000 is going to go to 100,000. And survey says, wrong. It was like Bob Barker, come on down, because that's what it did. It came on down. Bulls versus bears, S&P 500. I am bullish, but short-term bearish, right? So we'll see a pullback, and then we should see, it gives you a nice little, this is like a T-ball. Put the ball in the tee, the thing's gonna come back into your spot, and you whack it, right? That's what I would do. Again, not a trade recommendation, purely for educational and entertainment purposes. I hope you were very entertained. I really enjoyed sharing this with you. Please share with a friend. And NAS 100 is what I want to take a look at. The last thing I want to take a look at. Oh, Bitcoin. Bitcoin was at top of the hour. And you can see breakout, 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 new high, right? Now, all these people who are getting short, it's a double top. Oh, this is going to be beautiful. You watch this. 15,226 with people getting short, breakout to new highs. It's going to be fabulous. Short term, I'm very short term, like tomorrow. Not tomorrow. Tomorrow's Sunday. But Monday down, Tuesday, turnaround Tuesday, we break out. And all those people got short, their stops are going to get hit, and it's going to be a fabulous move to the upside. Spectacular move to the upside. Oh, can you say that, Greg? I've just been doing this for 30 years. Okay. Look at it. I'm just a Yoda with clearer skin, not so many wrinkles. Okay. Bitcoin, BTC USD. Bitcoin's interesting because we are in this. See, I said we had a flag. I said we break the flag, we got out. This is a bullish flag, came down to Fibonacci support. Boom, we got a breakout from the flag, right? We are at almost the Fed manipulation point. Yes, you were being manipulated. Yeah. JP Morgan Chase was able to manipulate the gold market. They got fined, what, $900 million for manipulating gold. Two traders manipulated gold for 11 years, or not that long, like 8 years. 8 years gold is being manipulated. And they got 1 year in prison or something like that. But one bank and two traders manipulated the entire gold market for the entire planet. So can you imagine what a government like the United States, the federal open market, with tons and tons of firepower can do to the Bitcoin market? Unlimited firepower. If one bank can control the entire gold market, could one government control the entire Bitcoin market? Yes, right? Because they have unlimited firepower. And so they're keeping this in this range between 15,000 and 32,000 or so. They're buyers down here, and then when it gets up here, they start selling. Now, there may be some, so this is almost like the range stuff. If you look at Bed Bath & Beyond, and if you look at the AMC theaters, who's the other one? Yeah, Bed Bath & Beyond, but the meme stocks. Meme stocks were like the casino of the hedge funds. They buy it, support, sell it, resistance, buy it, support, sell it, resistance. But then some smart ass told everyone in Reddit, hey, all these guys are short, let's get long. And all the retail traders and whoever this big rich guy or rich guys were decided to screw those hedge funds and cause all those stops to get triggered, causing price to rally. I'm not saying that can happen here, that the Fed will get caught with its pants down and will let this break out. And if it broke out, it would be a very, very huge breakout with a lot of people short in this area. And if the Fed wants to continue control, it's going to be very hard if inflation is low and they stop hiking rates or start hiking slower. We may see a giant up move, a breakout in Bitcoin. Okay. Now, how are we? So, well, Greg, you're like talking out both sides of your mouth here. Now, I really am on this because we're at a very critical point where will the Fed defend this or let it rally and fill these gaps? And one way we can use my market heat map is one of the tools it has in it. There's a whole slew of tools. One of them I like looking at is sentiment, and actually find out how people are positioned, as I call it, like the dumb money indicator, right? Oh, and let's click it again. Okay, sentiment. Not set. Oh, okay. Reopen, close tab. Sentiment. Loading. That's good to know. Still loading. Loading, loading, loading. Okay. And the sentiment will tell us like if people are positioned heavily long or short. And usually we do the opposite of what they're doing. And I'm trying to get this to load, and it's taking its very sweet time. So I'm going to refresh it again. Blowing the dust off of it. Let me just duplicate this tab and bring it on over here. See if I can massage it. Okay, apparently it's not working. Let's see if we can find another one. Looking up another one. And like the Bitcoin, looking for the sentiment, and the sentiment is all they're all stuck. Okay. Looking for the sentiment and seeing lots of stuff other than sentiment. So yeah, sentiment's not coming through. Okay, trying to. Yep, not seeing it. Okay, guys. So I'm not seeing that there's a sentiment there, and it's just not loading up anywhere that I'm looking. but I'm constructively bullish on Bitcoin. And I think we could see a breakout, maybe after a short pullback, to see a move to the upside, right? We're at this top of this range that we're hitting in here, double top, so we can see a little bit of short-term bearish pullback. So short-term bearish, medium-term bullish. In fact, we come back and tag this trend line. We have a trend channel, and so actually maybe look for maybe this channel to be hit maybe like 27,000. We could get a pullback too. Okay, with that, guys, I want to thank you so much for being with me for bulls versus bears. We're going to stop sharing here, and again, thank you so much for being part of our community. I look forward to seeing you at our upcoming webinars, and we'll see you later. Peace and pips. Cheers.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!